Good morning, traders. This is Cayman, and welcome to another Flow Show. We are Wednesday, the 19th of February. Why am I saying the 30th? We're only the 19th. Don't front run the calendar, K. So let's straight away dig into what has happened overnight. And well, unfortunately, we have to talk about geopolitics, as we have to nearly every day, and the main subject again on that side has been the Ukraine-Russia situation. First of all, the initial plan that Trump put forward has been shot down by Zelensky. The deal where the US wants to get about half of all the minerals that Ukraine is producing and did not fly, as we talked about on our latest flow shows. So that is has been rejected. But then there's more headlines that came in overnight. And one is that Trump has put another few, how shall I say, bad headlines for some into the waves. He says that it's time for elections in Ukraine, and that Zelensky should have taken a deal already earlier. He also said, sorry, let me just kill my squawk here. Um, he also said that they are preparing a meeting between himself and Trump, and we saw a few headlines there coming in just a few moments ago saying that the meeting could take place even before the end of February. He also said, and that of course was heard very loud and clear by the Russian officials, saying that the NATO has been partially responsible for the escalation of the conflict. He did say that for himself, it's okay if EU wants to put troops on the ground, but he did not hint at doing so himself. And that's where we are now. It does look like a deal is going to be from US and Russian side, at least, going to be mainly discussed between them. And the thought that emanates from that is that EU is really being left out of all the discussions so far, where Zelensky, NATO, European Union want to be around the table. But for now, it does seem that Trump wants to deal with Russia and see what comes out of there. Now, the question is how far is Trump going to go Russia's way before saying that's enough? But that remains to be seen for the time being, the situation. And we see it, if we bring it back to markets, we see it weighing on the euro to a certain extent over the past few sessions. How far is all of this going to go? So the situation being still very fluid, obviously, we have to watch for all headlines coming out. On the side, Mr. Trump also said that he may impose tariffs on cars, which would be to a similar extent that he may impose towards the 2nd of April on pharmaceuticals and semiconductors. So that's another one that could be understood that mainly German cars in the Eurozone are going to see extra tariffs being imposed as well, which is likely another weight around the euro shoulders right now. On the tariff side, yeah, on the tariff side, and then I'm moving over to Japan. Ishiba, he and his government reviewed the economic situation, and they're saying they're still seeing it as a moderate growing economy. albeit still very closely monitoring how the tariffs are going. And then Ishiba came up as well with a comment saying that he questioned the unjust interference of the US politics to stop this Nippon Steel US Steel deal. So we're still not out of all the uncertainties between Japan and the US, where globally it is still accepted that Japan is going to escape the harshest tariffs, probably. One of the reasons why the yen is still doing pretty okay, but we're still seeing uncertainty surrounding all of this because of now Japanese and US reactions now and then. On staying in Japan, the Bank of Japan, one of the Bank of Japan deputies came out, one of the hawks came out saying that they still need to gradually hike to prevent excessive risk taking and pushing inflation up too much. And he doesn't see a perfect timing, but he says that real interest rates are still deeply negative and they need to remove a degree of easy policy. So he is a hawk. That is something that we need to remind ourselves of. But we are still in this scenario where the Bank of Japan is likely to continue to hike sooner or later. As a matter of fact, maybe I can quickly run over it later. The Japanese longer term yields are at fresh highs. The 10 years hit 143%, so we are nearing 1.5%, where it may get very attractive for the Japanese whales to start to repatriating or continue or accelerate repatriating funds and to go more deeply into the JGB market. So that is one that we need to very closely monitor those Japanese yields for the reasons that we already spoke about before. Um, what else did we have? And I'm going to go quickly back to the US because yesterday we also saw some comments from the US Treasury Besson saying that, and he is applauding the Dodge efforts, how he calls them now, to cut the spending. And he says that Dodge so far has saved an estimated $50 billion. Okay. He also said that the taxpayers don't have to worry about the Doge. The question that is, of course, raising when we speak about Doge is that maybe the taxpayer doesn't have to worry about them, but the increasing layoffs that we see, people losing their jobs, may have a different opinion about that. And we have seen more and more departments that are now going to be impacted. So, as we have spoken about that already in prior flow shows, we have to see when exactly we will see that effect of all those layoffs coming to the job numbers. We don't really know exactly when they will be taken up, but sooner or later they should start to show up. So we need to pay close attention to that as well. Furthermore, we had Fed's Dali talking yesterday, saying that the world is uncertain now, when she was asked about more cuts and that the policy needs to be restrictive. So that all of that is still pointing at the Fed remaining firmly on hold. And I'm just going to front run a little bit what we are going to talk about later on. We have the FOMC minutes tonight, but been asked a question in our chat room about those minutes and the impact it could have. I think we've heard of most of the Fed speakers already, and I'm not sure whether the minutes are going to create more than the usual algo blip. It could somewhere, it could accentuate the dollar demand, perhaps, if the market sees something in that FOMC report that would really hint at even a potential hike or so. But apart from that, I don't think that we are going to see too many waves coming out of this FOMC. Okay, what's next? Just reading through my notes. Yes, we're staying for a last bit on the geopolitical front. It has been reported that a Chinese warship patrol sailed very close to within 150 nautical miles of Sydney, and that is an unprecedented move, which drives the Chinese naval closer to Australia. So that's another sign that they still want to test the military resolvence of other countries in the zone there. So that's another pressure point that is not waning so far on geopolitics. On the other side, we've heard from the Chinese officials, the MOFCOM, a bit earlier. They had a meeting with Japanese officials apparently yesterday, and they are now pushing to reopen China, Japan, South Korean free trade agreements, which is an interesting one, seeing how the geopolitical situation is evolving across that broad zone of the world. Not sure whether that idea is going to fly anytime soon. But if you talk about China being potentially tariffed again later on today, increasing tariffs, they are obviously looking for outlays for their product. So they are still very interested in keeping agreements left, right, and center. Moving on, let's see what happens on the data central bank front. Yesterday, that came out over face. We had a bit of sticky Canadian inflation. We can't say that the market traded too much of it. The dollar Canada remained relatively stable around the whole event. We are not too far from where we were actually when those data came out. So we move on from there. Covered Dali. I have not really seen the effect of the auctions, but it didn't move the markets too much either. Then we're moving on to the Japanese data over here. A bit of a negative trade balance, but exports have risen quite a bit, which is all right. And the imports, though, have risen massively. And I think what happens on trade still, and we have still to put it in the light of what is going to happen on tariffs. So there could still be some front running of what potentially is in front of us regarding tariffs. So we have been speaking about that already in length, and that people are front loading. In order not to pay the higher prices, the potential higher prices later on. We saw not too much of a move on the back of it, and the combination of the Bank of Japan had, but it does seem that the yen is still finding some reasonable bids on dips. Something I spoke about on Face yesterday. It seems that we are still in this kind of scenario right now. Aussie wage price index coming off, so that is reducing some more pressure on the RBA to keep rates high. Can't say that it really impacted the Australian dollar too much right now. And then the RBNZ. So as expected, widely expected by the market, they went 50 BPs. We saw a quick dip lower in the Kiwi, which was then reversed once the market read the statement and also heard the press conference where he first of all, the statement stated that their rate cut path was a bit steeper than what they had expected in November, but then came the additional lines where they said that the market is relatively right in pricing in an extra 2 rate cuts, but they will be rather 25 BPs. They still think that they need to cut rates further, but then Orr said that they were not really in a hurry to get to the neutral rate too fast. So he said we don't have to rush things, and that's where the market decided to take profit on Kiwi shorts. And there's an interesting one because a few of the ForexAnalytix people, Ryan not in the least, are a bit short of the Kiwi, and there was an interesting development on the Aussie Kiwi, which I will have a look at when we will be looking at the charts. Okay, what happened next? Next, Sterling, sticky, sticky CBI, sticky, relatively sticky PPI as well, although we had some negative revisions there, but it's mainly the CPI and the core CPI as well, which remains sticky. The CPI was mainly driven by increased school fees, by less declines in airfares, and also food inflation remained pretty high. Is it going to change much for the Bank of England? The market may think so, but I don't know whether at this point, because this could be kind of those school fees have been ramped higher, the revisions. It may be that there will be a give back coming the next month. I personally don't think it's going to change massively for the Bank of England, but we have to note obviously that this inflation is not coming down as fast as the Bank of England would hope for. And that's where we are now. Sterling only found a very limited support from it. And that brings me back to what I pleased to say to remind people that inflation is not the only thing driving currencies. There's a lot going on, and not in the least geopolitics right now. But when it will come down to growth again, we will have to the real measure points of the strength of an economy. And the market is still not convinced, in my opinion, that the UK economy is completely out of the woods yet. Okay, that is about it for what the data are concerned. Let me quickly run over what else we have to talk about. No, I think we are nearly done. We're nearly done there. So let's have a look at what the rates are telling us. First of all, gold, and look where we are. We have tackled the prior all-time highs, and we are now trading above. We are now trading on this 161.8, 29.47. This is really, in my opinion, the gateway to a visit at 3,000. Okay. Don't forget the dollar. We still have like the yields playing a role. Okay, and don't forget the dollar. The dollar is showing a bit signs here of strength globally. So that may put a brake on gold, but it is pretty clear that this is still the trade, whether it's anti-inflation, whether it's anti all the bad things in the world, whether it's just a refuge instrument where the people are like to get there to be in it because there is so much uncertainty surrounding all the rest. So this is still your shall I say perfect trade to counter everything else. It could be. I think it's still very big, and as I was saying, long term, it's still extremely big. There are no signs of this to really start to come down. We may be slowing a bit the pace, but the pace is still there. The direction is still there. There is still nothing to fight this trend for me right now. Moving over to silver, and that now has is looking better actually than I thought it may be. But we still need to overcome, and that is the line that I borrow from Stelios. Oops, sorry. that I borrowed from Stelios. This one here is a very interesting one because we stopped right on there. We also stopped not too far of the channel top. But silver is doing pretty okay. Is that potentially also trading? Just money doesn't have any political opinion, right? Money does not always judge whether things are right or wrong. It is just having been put to work, and perhaps the prospect of an end, of a potential end to the Ukrainian war is keeping this bid as well. So watch very closely what's going to happen around that prior high here if we get there, 33.30s. If you fly through there, we could see it very quickly trade up back into the 34s. We will have to see what happens on the geopolitical front there as well. But as I was saying yesterday on Face as well, it appears to me that regardless of all trend lines, channels, or whatever, levels around here, this 32, 30, 50, and perhaps here as well around 31.80 are going to be very, very decisive for when we get out or have clarity on everything, whether it be the war, whether it be the tariffs, whether it be um, potentially even China, how they are going to generate kind of revival or trade relations with a lot of other countries. This zone here, to me, is shaping up as being the one that is going to be decisive once we come out of all of it. If we are below, that means that the sentiment in the market should be negative, okay? And then we can perhaps see moves back down into the 28s. If in turn we are above this zone here, that means that sentiment in the market is very, very positive, and we could actually go for much higher levels. I think it's a bit early to call, but it is a zone that I'm really starting to look at. This could be potential decision time, okay, for the more medium, even longer term in all things silver. Moving over to euro dollar. Euro dollar, I don't particularly like it. And I don't particularly like it for a few reasons. First of all, and then we have to come back to the geopolitics. It does. Europe is not invited to discussions. We know that, well, we hear enough about Trump and etc. That Europe still looks like the one that is going to pick up a very big bill, but perhaps even without being around the table. Now the situation is still very fluid. Things can change rapidly as well. It all depends how far Mr. Trump decides to go somewhere in leaving Europe out, or how Zelensky can turn things around and get Europe to that negotiation table. But in as far as the headlines are concerned right now, I don't think it's looking very good for Europe. So I think rather than technicals, this is more again a kind of a sentiment in the market towards the euro that has dragged it back down under this 104.5 right now. So, and then besides that, obviously we still have uncertainty about European growth, etc. That is still holding the euro from bouncing much higher. I do think, though, that the situation is still very fluid and things can change, okay? If you look at it purely from a technical aspect, 104.5 didn't hold. Tried to make up our mind around there. For the time being, we're below it, and as long as we're below it, I think there's a chance we get it back to 103.90 figure in the short term, maybe even down to 103.70 perhaps, which would still be a retracement of what we've of the recovery. Okay, I'm not saying that we cannot go higher, but for the time being, I'm viewing this as a bit of a disappointment, if you wish, to for the euro bulls, or especially in the euro dollar, to continue higher. And I'm going to straight away now look at also the other reasons why I think euro is and euro dollar is trading a bit heavy. And we're talking about the euro crosses and euro sterling in particular. And I want to come back on this longer term euro sterling picture. You remember a while ago I showed you this move that we saw in July, September of last year. How perfect can a copy be? This is near perfect, a near perfect copy of that move. And okay, we have seen it then break down lower with the usual up and downs, but we are here in this picture right now, and I think it's relatively important to keep this in mind for what happened, because if we continue to trade it this way, we could actually print a fresh low. But the jury is out, okay? Because before we can talk about it, there's like mega bits here in the low 82s, and if we ever get down there, it may be enough as well. Okay, this is just a line. This is just a potential target. The It's no more than that. But the overlay of what we see here is near perfect. Okay, so keep that in mind. Going to the shorter term, then we've broken through this zone. I can even put it lower here, so we can look at this 83, 15, 20. We've broken through it, and we're trading below now comfortably. I think it is still negative in the shorter term for as long as we are below this 83, 15, 20. I'm trading it as such. I am gradually removing some of my shorts in slices. You know how I trade, because we are getting closer, ever closer to that major support. And it's like trading traffic lights. You know, here the light is green, but the further you get closer to the traffic light, it can start to flash orange and even red if we get down there. So that's kind of the way I'm trading right now. Um, so that for the euro sterling. Moving over to the, yeah, I see what you mean, Bran, on a bull flag, but how long is a bull flag, you know? That's always a question I have. I, I know that people talk about percentages of the move here to judge where the difference between a bull flag and a wind sag. And I don't know. I'm not a big fan of bull flags or so, although I am looking at them. Cable then. Well, we are here, and the dollar, barring gold and silver, the dollar doing better again. We are back in a retest of this broken trend line. Last time, just little blips below, but it bounced afterwards. Perhaps it's a bit more dangerous now. We could see a move through those prior little lows and get a move back into the 125.40s, perhaps from here. 125 and a half, 125.40 should be the next level. I'm not excluding it, but if it would hold again here, that would tell me that sterling still keeps some of its appeal in versus the dollar, and we could get back up to 126.35. So watch this little range here, 75.90. We are in it, and then 126.30s on the top side. If we get back through 126.30s, then I think we can gradually move up, perhaps to levels around 127. If you take this away, the setback that we have here is still very much corrective. Even if we get down to 125 and a half, would still be kind of corrective. Even down to 124.90 figure. I think the big danger zone here is just around 124 and a half, 125. If we start to get back down below 124 and a half, 125, then I think cable is clearly in danger. it's probably going to have to take a combination between sterling weakness and also dollar strength. All right. Um, Another one where to illustrate the euro relative weakness is post RBNZ. We have seen this euro kiwi coming down again. And look where we're trading it. Okay, here as well, people can make a point saying that this could still be only a consolidation, and then we go higher afterwards. I still find the euro trading relatively weak, so we have to watch this euro kiwi 182.15 down to 182.05. We are really trading very, very close to it. If we see a break, we could see an acceleration in the 180s perhaps. But in the meantime, obviously, respect the channel, and we held nearly to the pip. Okay, so this is a very important one. And whoop, what am I doing here? That is not what I wanted to show. So this is a very important level. Another one, which is getting close to support here, is Euro Aussie, nearly back to the prior low. We're trading just above 164. This 163.80 is halfway of the November December rally. So this is a relatively important zone here. Watch what happens at 163.80, but look at overall. We can see in all those euro crosses are looking pretty similar. And if you look at the euro yen, it's looking similar as well. All the euro crosses are coming back down. But the euro yen hasn't broken down yet. Okay. Um, because of the dollar yen not being extremely clear and a bit is still holding above the prior support zone. We are turning around 152 still. View unchanged. I would potentially sell a rally, all else equal, if we get back up into this 153 three quarter. But I'm not sure if we're even going to get there. Um, Quick look at what's happening in the Swiss. Joao, we're still in a short-term channel up, but if you look at the longer end, it could still be very fragile. Yeah, if we start to break back below 93, 95 figure, we could see a move back down. Is there a reason to go down? I think from the euro side, yes, but from the Swiss side, there isn't any. And also, if you think Swiss, you have to think low yielder, and you have to think a bit risk. And if you think about risk, um, there are other instruments that seem better to trade risk right now. I think this is more euro weakness than Swiss trading on the back of risk. Let's also, I mean, formerly in the old days, we were trading Swiss correlation with gold. So when gold would go up, Swiss would do better. And I don't think this correlation holds still right now. Correlations come and go, as we know. I don't think that is a major correlation right now, but perhaps keep it in the back of your mind. But I still think this is more like a bit of a euro move here, euro coming back versus most. Um, while we are on it, we did break in the dollar Swiss, yeah. We did break under the trend line, and we're still under there. And then we tried under 90 the figure, but we had 1, 2, 3 attempts here in the past month or so. It's still showing up somewhere. It still looks a bit cold below 90 the figure on the dollar Swiss, and that is something that I'm keeping an eye on here. Especially the dollar not doing too badly. Yeah, watch what happens if we get back up to 90.60s in dollar Swiss. It should, in theory, cap up there. Okay, if this move is to continue, if this trend line is to continue to reject. Guys, anything else? Yeah, the Ukraine situation. Ukraine, Joao, in Swissy, Ukraine is you could bring it down to risk, right? The Ukraine situation. if it gets resolved in a way that would be okay for most of the participants, Swiss is probably going to weaken because, and then you know what happens then as well. I think gold may lose of its shine. If you don't need a hedge against all the bad things in the world, gold can lose some of its shine. We have seen it already in the past. Those setbacks in gold usually come when we have hints at a situation that could see some kind of amelioration. Okay, and if a situation improves, then we can see improvement as well in sentiment, and then we don't need all those big hedges against all the bad things in the world. Okay, S&P. Well, I mean, 6130, we're around there. We're trying fresh highs. But keep a bit of an eye on this 6130, okay? It could be enough for now, but overall, as we were already, most of us have been saying, there's absolutely no reason to start selling it massively. It doesn't look like we are going to go much lower anytime soon right now. Money needs to be put at work, and when you have uncertainty in bonds, you can go into equities. That's what the more important money managers are likely still doing. You get where you go, your money goes where you get returns, and all those headlines that we see and we think may be important, money managers, they put all of that in a big model, and if the model doesn't see anything that changes a situation, it's probably not going to react. We are going to react, or algos are going to react on little changes um, or little nuances in headlines. But if you think about, for instance, the Fed staying on hold, yeah, okay, it's been said 20 times already. So a new headline of this is not going to influence big money managers' portfolios. They are still going to just continue to trade what they were trading before. For the time being, they may actually think that things are looking relatively okay for equity markets because there is an outlook for perhaps an end to a war situation. Whether the outcome is good for the one or the other, that is something psychological which a model may not take into account. And as I said, money doesn't trade on psychology. Money trades on what it sees and where the model tells it where the money should be placed. And with that, guys, I think that's okay for today. Just let me get quickly back to the calendar because that calendar. What else is on the docket for today? Well, not a lot. We're seeing a few housing numbers out. Housing numbers haven't really moved the markets too much. But you never know, okay? You never know. For the time being, it's been relatively okay. We have seen up and down data of late in the housing markets, but it's not really falling out of bed yet. So I reckon that is not going to be such a big market mover. For the Aussie watchers, we do have the employment report coming up next night for us, very early morning for some of us, or late evening for the people in the US who are following us. And then we have rate decision in China. Um, could they already be tempted to do another little a little cut just to show that they are still supporting the economy? It is not expected. Okay, so that would be the surprise trade if they cut rates again. But for the time being, that is not to be expected. Leaves me to thank you all for being with me today, and I'm wishing you a very good continuation, and we talk to each other again tomorrow. Thank you very much.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.